And good morning to you all. Here's the good news. The good news is that rumor has it Russia and Ukraine are not going to war. The other good news is inflation clearly doesn't matter anymore. Just look at the future. So we Gucci. So this is one of the funniest things I've seen. So I wake up this morning, I see futures are where they are. Stock futures jump. Headline story: stock futures jump after reports of military pullback of troops. So for the past 3, 4, 5 weeks, whatever it is, hey Max, welcome in. So for the last 3, 4, 5 weeks, what has the narrative been? Inflation, rising interest rates, rising this and that. And now it's Ukraine and Russia. Russia and Ukraine allegedly are not going to war. NATO didn't say that, so I'm a little bit confused. I've been seeing conflicting stories, so let's be leery on that one. But now inflation doesn't matter. Let's just rip stocks to the top again. It's so funny. Anyways, so I have to say this story. So if you go to my Instagram, you'll see what I did for Nicole for Valentine's Day. So we go by there's a truck stop that is like a rest area that's, 2 miles from my house. And every freaking time we pass it, for whatever reason, this truck stop owns her brain and they have vending machines. And she's like, I want to get snacks from these vending machines. She's been literally saying that for like 6 months. So in all of my infinite wisdom and the romantic that I am, I decided to get her a roll of quarters. And I took her to the truck stop and I gave her the quarters and I said, buy all the snacks you want, up to $10. That was that. Ladies, you don't know what you're missing. Anyways, let's get into some news stories. Stock market futures jump after Russia reports pullback in military troops. Man, there's some interesting videos out there of what Putin says. He's like, we have nuclear bombs. We're not afraid to use them. I've had to listen to President Macron from France torture me and talk to me for the last 6 hours. It's just incredible. Vladimir Putin, he's one of a kind, that's for sure. Oil has been falling. So I also find it funny to see that oil is falling when everything had to do with, it wasn't necessarily Ukraine and Russia tensions and I'm just going to say international tensions that were the issue. It was always, where's inflation going? Where's the cost? That's where the cost of the barrels are going. And then all of a sudden, yeah, a roll of quarters is $10. And then all of a sudden, now it's Ukraine and Russia and prices are falling off of the highs. I mean, it's so funny just to see this. It's always the narrative of this is going to happen. This is going to happen. It has to do with inflation. And then all of a sudden something comes from the side and that's what takes over and pulls things down. I think it's funny. So oil retreated from its highs of 2014, falling 3.76% to $91.87 per barrel. Okay. I should have bought her the vending machine. I actually did say I really want one of these vending machines in my house. Then she said, you're too much. And then we left. The escalation of Russia and Ukraine tensions come at a time when the stock market is already vulnerable given inflation worries and potential Federal Reserve tightening. You have everything laid out perfectly for the market to go lower. This is from somebody from Sanders Morris Harris, Chairman George Ball. That is a mouthful. Everything is saying that the market can go lower. And literally every metric that you look at, every metric, everything in the whole country is just saying everything is going to go lower, but the stock market just keeps going higher. Think about it. We just came out of the biggest economic shutdown in the history of the world, and the stock market went to an all-time high. Just think about that for a second. So you're telling me you're going to shut down the entire world, basically, and there's going to be no repercussions? Come on. You have everything laid out perfectly for the market to go lower, he said, pointing to higher interest rates, slow earnings, slow economic growth around the globe. There's no good reason to see this market go higher. It's absolutely true. We believe in the importance of to focus on market signals rather than headlines. We're also respecting traditions of pattern of prices, interest rates, and equities. That's what Lynch said. John Lynch, he's from Comerica. Walmart reports today. That's that. It's just a lot of stuff going on out there. Okay, let's go and just talk about this Fed. This James Bullard, he is, he's incredible. You could be my Valentine anytime. I would gladly take a roll of quarters. Listen, it's not about, I always think it's fun to do things like that. I think thinking with your head is more, I think that was a great idea. I'm going to give myself credit. Fed Bullard says the central bank's credibility is on the line, needs to front load on rate hikes. Okay, so James Bullard is interesting. He's the most quote unquote hawkish. I hate when they say hawkish and dovish, but they say it, so I'm going to use it. But he said on Squawk Box, I don't think we need to front load more of our planned removal of accommodation than we previously have. And that would be the mortgage-backed securities, the treasuries that they're buying, and rate hikes in March to 0.5%. We've been surprised to the upside inflation. This is a lot of inflation. Okay, sir. I didn't think that anything was going to aggravate me right now, but we've been surprised by the inflation. Type please in the comments, have you been surprised by the inflation? Please type in the comments if you are surprised that after printing and giving away $13+ trillion over the past 18 months, it's surprising that we have inflation. Supply chain shortages due to vast shutdowns, inflation. Please let me know if you have been surprised like the idiots at the Fed have been surprised by inflation. Our credibility is on the line. You have no credibility. And we do react to the data, he added. However, I do think that we can do it in a way that is organized and to not disrupt markets. Well, sir, when you swing a pendulum one way, we have one person surprised by the inflation. I am surprised that it is only transitory. Touche. Wait, there's inflation? Okay. Everybody. So the only people that were surprised by inflation were James Bullard and the Fed. So that gives me all the confidence in the world. With that being said, he said, we can do this in a way to not disrupt markets. So if you have markets, if you have a pendulum, and this is the pendulum, and it's going to swing, and here's your highs, and here's your depressing lows. If you swing your pendulum up here and beyond, to be honest, you are going to try to do this in a way to not disrupt markets. Well, sir, you're all the way up here. You have taken a rubber band and you've stretched it so far that there's barely any stretch left. And when that thing snaps, it's going to snap way over here. And you have done that. So you got to disrupt markets. Markets are going to be disrupted. That's just how things work. It's very simple. These comments come after Bullard rattled markets last week, saying that he thinks the Fed should raise its benchmark short-term rate to a full percentage point by July. That still is not going to do anything. History tells us that Fed policy that is abrupt and aggressive can actually have a destabilizing effect on the very growth and stability that we are trying to achieve. This is what the San Francisco Fed said. So what I would favor in moving in March then is moving in March and then watching, measuring, using our brilliant minds that we are surprised about inflation, being careful of what we see ahead of us, then taking the next interest rate hikes into play. This is the best. This is the best. Sometimes you don't have to say words. It just happens. What is this? Okay, let's move on. Oil, we kind of already talked about this. Guys, follow oil. That's really all I have to say about this. The reason I pulled this story up is I want you to follow oil. If you're going to get a reaction to the downside, remember, oil has been ripping due to inflation, right? So I do think that oil is going to continue to rip for these reasons. This is just a little bit extra. Now, if a war actually breaks out and happens, now we can reconsider. But it's all talk right now. If just as long as there's talk, inflation is still going to be the thing that drives. Inflation, supply, and demand is going to still be the thing that drives oil prices. So let's see what happens here. This is all talk for now. And if anything changes and it becomes physical, then we got to reevaluate. And then that's going to actually cause a true narrative. And then we're going to really have to find out what's going on. Guys, smash the like button for me. Crude has swung wild this week amid flurries of tensions in Ukraine while the U.S. has warned that an invasion may be imminent, Moscow is now calling for a diplomatic approach and has repeatedly denied plans to assault. All right, we'll see. We shall see. Intel expands specialty chips with a $5.4 billion deal with Israel's Tower Semiconductors. This is interesting. Intel is buying Israel chip semiconductor company Tower for $5.4 billion. The company said on Tuesday, giving it access to more specialized production and making it better positioned to take on the soaring demand for semiconductors. That's great. So the acquisition will deepen Intel's presence in the space dominated by Taiwan Semiconductors, the world's largest chip maker. Intel has the largest presence in Israel for nearly 50 years. They bought Mobileye in 2017 for $15.3 billion. You guys remember that spinoff that was being talked about. And the deal's about to close. It's supposed to close in 12 months. So we will see what's going to happen with that one. But yeah, Putin has. I don't really think that Putin is too worried about saving face with anybody. Buff Daddy, Berkshire Hathaway bought about $1 billion. Guys, you got to go to my Instagram and look at this. So somebody sent this to me. I can't remember who, but somebody sent this to me on Instagram. You can go and look after. I'll pull up my tag thing afterwards. But Buffett, Berkshire Hathaway bought nearly $1 billion worth of Activision Blizzard. They bought it on December 31st, I believe I read correctly. So, and an average of about $66 a share. So they have owned 14.66 million shares valued at $975 million since the end of 2021. All the big filings came out of all the big quote-unquote super investors. Microsoft has announced, you guys know this, that they're going to buy Activision Blizzard. I believe it's in June of 2023. The deal will close at $95 a share. The Federal Trade Commission is the one that's going to be evaluating it. So there's a new head of the Federal Trade Commission, and it's she came in and she said that she's trying to not allow a lot of these acquisitions happen. This is going to be the biggest cash deal in the history of America, if not the world. I'm sure the Saudis have had bigger cash deals and stuff, but yeah, I mean, hey, we're gonna see. But Warren Buffett bought this, and let me pull up this thing. What is this? Here's my Instagram at TraderMo_EM. I'm gonna pull it up and just read it to you right quick. Listen to this. This is so funny. So it's a story. It says Kathy Wood ARK bought C shares as gaming firm plunged. That's from Bloomberg. And then you go to the next story. Buffett's Berkshire Hathaway bought about $1 billion of Activision Blizzard before a Microsoft deal. I just think it's so funny. One's buying legit companies that are just like incredible. The other one is buying C something that I have no idea what is going on. Short Intel. Listen, I don't give an F. I'm making money. That's all I want to do. I think all of these stories are pre-baked. No. Gardner. M.I. Gardner. I think these stories are pre-baked. I disagree with you. I've said this for a very long time. I don't think stories are baked into stocks. I don't think they are. I think anytime you get headlines out there, the market reacts to it. Even if I bet you when interest rate get hiked on whatever the date is in March, I bet there's a reaction one way or the other, and it's going to be drastic because I don't think that prices are baked in like everybody thinks they are. That's just, I think that the markets are very news driven, and that is that. So speaking of news driven, let's see what the futures are doing. 1.06, 1.7. Okay, so they're pulling back a little bit, and we'll see what happens. Look at the 10-year yield, 2.03%. 2.03%. Look at the 3-month yield. This yield was at 0.01% just 6 weeks ago. What do we have anything coming close to inversion? 5-year and 10-year are coming real close to inversion. So keep a watch on that. If you get any kind of inversion between rates, the big one for me, the big one is to a lot of people is the 2-year and the 10-year, and those are coming quite close. It's really, what hitting the fan if it's 10-year and 3-month. Those to me are the big ones. That's a big one. So Roblox reports after the bell, Airbnb, Upstart, Palantir, Viacom tomorrow, of course, NVIDIA, Shopify reports before the bell, Fisker reports before the bell, Palantir on Thursday, the company that, they're the greatest company in the whole world. That's all I have to say about that. Roku, Walmart is on Thursday after before the bell. That one's going to be an interesting one because that one really tells how consumption is going in the country. We'll see a lot if they're having any shortages. We can see how that goes back to shipping, anything like that. DraftKings reports on Friday before the bell. And if you want to join the software, the chat, be involved with 6,000 people, 1,000 in the Bid and Ask Nation. Actually, it's like 1,100. 8 pillars, retirement calculator, stock analyzer tool, 8 pillars portfolio, exclusive content that you get from us. I made a great video yesterday. According to a lot of people, I thought it was pretty good. And it explained selling puts. And there was another one that was explaining covered calls. So they're about 4 or 5 minute videos that I just go through very simply and explain what selling puts are and how Paul and I do it, and what selling covered calls are and how Paul and I do it. So $30 a month gets you access to everything that I just talked about for $30. And if you want to join the Bid and Ask Nation, more exclusive, direct access to me, $80 per month gets you into that tier. We will be day trading live today at 10:15 Eastern time, so about 59 minutes from right now. And that is that. So come on in. Bid and Ask gets that. Send me some stocks. We will hit them, and we'll go from there. All right. Let's see. I'm going to read, while you guys are sending some stocks, I'm going to read some comments. Please ring the bell when you mention Kathy's name. Okay. I think all these stories are pre-baked. Nah, we went through it. I don't agree. Insider trading. Nah, I'm not going to speculate on insider trading from Berkshire Hathaway. Let's see. The market is so news driven. Yeah, the market's super news driven, very sensitive. We need to look at ARK. We can certainly look at ARK. Oh yeah, I did see the Mexican avocados are not coming to the United States anymore. That's an interesting one. I would pay $10,000 for what? A one-on-one with Paul. Let's see. Why aren't prices going up? Okay, so let's get into it. I'm going to look at ARK. We're going to start with ARK, and then we'll go from there. I'm going to look at the ARK Innovation one specifically. $73 a share it's going to open at, and this thing in February of 2021 hit an intraday high of $159.70. So clearly, disruption works, and that's all I have to say about that. So they've kind of built in their own support level here. If they drop below these lows of these wicks, this thing is coming back down to COVID levels. And listen, it's probably going to do that. I mean, if this market gets hit anymore, let's just look at, remember this. Now let's look at the S&P. So hold on, let's zoom in a little bit more and just see. So we're going to zoom into, this is November 4th, 2021. Now let's look in the S&P. November 4th, where's November 4th? So November 4th, so actually you had November 4th, you actually were kind of still climbing, and then you had this massive drop in price. And even with the rebounds that have been happening in the S&P, ARK and disruption has not done anything. So it's pretty incredible just to see what's happening. Good morning, Seth. So Seth and I and Paul will be day trading at 10:15 Eastern time this morning. So a little under an hour. Bid and Ask Nation only. Come on in and just watch us trade, learn from us, etc. Let's go Riot. I'm sure this is going to be a riot of a chart. All right. Okay. Hype Dork Stock Central. I don't even need to know anything about it. I have no idea what it is. Riot Blockchain. Well, now I do. Nothing. Incredible strikes. This is the best thing ever. Stock Mo told you probably to buy it right here, and boom, you burnt. So that is what that looks like. If I was you, I would not play this thing long term because this is crazy. If you want to do anything, you can come and short it over here. If it drops below the 25-day moving average, you can get a short down to this $14 level. But outside of that, I would only be trading in this from a day trading perspective. SPY has a head and shoulders pattern. Why don't we pull that one back up? Yeah, I mean, I think it's more of an ugly face pattern than anything. Here's your... Yeah, I mean, I don't really see a lot of pattern in here. I'm trying to look for something. I don't really see a pattern. Like this right here is kind of a head and shoulders. It's very weak head and shoulders. Stocks did fall right after, and that's typically what happens with head and shoulders patterns. But this is such a... I can't really say that this was a solid head and shoulders pattern, and that's why this fall happened. It's a little too tight. It didn't really develop. But right now we can see that we're just at a very strong support level right in here. So if the S&P drops below this long wick of, this is either January 28th or 24th, you're going to have some fall in there. You're going to fall to 400, and it's just going to keep going lower and lower. So they are going to do whatever they can in this market to not let this stock market drop below the 200-day moving average. You see that here's what happens. When stocks hit the 100-day moving average or 200-day moving average, this is on the S&P, you see accelerated selling occur. It's because your quant funds are in there. As soon as they hit those numbers, the computers just start selling. This is what you saw here. Now, this stock dropped well below the 200-day moving average. And then you saw this incredible rebound on this day. This was the 24th of January. I bet there was something in here around this level. Why don't we just zoom out and take a look? Let's see. Yep, exactly. Right there. So right there. And look at that. Look where those wicks just stopped. Right there. This is where you had a support level that came in previously from September and October. And as soon as the stock price hit those levels, then the quant funds started shooting the price back up. They started buying, quote unquote, buying the dip. And you saw the acceleration through the 200-day moving average. You saw accelerated volume coming in, and so forth and so on. So that's how quant funds work. Guys, if you sit at a computer and you just notice, as soon as, when you'll see is when the stock price hits the 200-day moving average, you'll just watch it. Just watch it on Yahoo Finance or something, everythingmoney.com. It'll just start, you'll just see a flux, and you'll just see the stock market just start dropping. So anytime you see 5-minute window where just things get pummeled, it's quant funds. It's exactly what that is. They're going to fall to the next support level. All right. What else do we have? Palantir. Why not? This is the stock from the gods. Let's see. Let's pull it up here. Okay, so Palantir has kind of created its own support in this area. It can certainly fall if it breaks below those let's see these wicks. I just want to get accurate dates here. January 24th and January 28th, I assume. Yep. So if it breaks below those numbers, it's going to come down to this $8 to $10 range. That's just what's going to happen, and you can go from there. Unfortunately, if it goes below 8, you have no idea what's going to happen because there's no support in there. Sleep Number, SNP. SNBR. I'm sure this, so I don't like really trading sleep number because your average shares traded per day is less than 500,000. This has had an incredible fall. You have hit support. Definitely have hit, and you've created a support level that's been happening for about 2 months here. Yeah, 2 months. We're already in mid-February. So here's the deal. You had a really big fall through the sweet spot. You tried to rebound, you fell back down. You tried to rebound again, you fell back down. You're trying to rebound now. If this red line doesn't push and make it into the sweet spot, do not do anything with this one. Only come over here and swing trade it. Let's see. Boeing. Oh, man, we haven't done... I don't even remember the last time I typed in BA into the tickers. Oh, geez. Consolidation center. Okay, here it is. This is a very easy one. Here's your high. Here's your low. Let's find an accurate middle ground. Here's your middle ground. And you can see that with the exception of this little blip that happened back in here, you cannot break above... What level is this right now? You cannot break above 230, 232, whatever you want to call it, 230. This is what happens when you have 50% rule stocks. All of this is just overhang. All overhang. That's all that is. And it's just negative pressure. So when the stock price comes up, it pushes back down. People are just saying, after the stock price fell, if I could just get half my money back, I'll exit. They get half their money back, tons of selling. Same thing. These people are the people that didn't sell here. If I can just get back to that 230 level, I'll get out. Same thing. And now you're just hovering and you can't break above $230. This is going to take a long time. You tried to do it a couple weeks ago, end of 2021. You're stuck at the 200-day moving average. Guys, if you wanted to do something here, if you got a sweet spot reversal, you could run this thing up to 230, but you're not going to make it much farther than that. So, plus, you have to contend with your 1 and 200-day moving average. All right. What else do we have? EBIX. Haven't done that one in a hot second. EBIX. Okay. Yikes. Yikes. So incredible fall. Man, that's probably not accurate. That's probably more accurate. You know, if I'm you, this is, you know, when you're value investing and it's in a too hard pile, it's kind of in that too hard pile. This gap is scary. If you take out the gap that has happened and you just draw a couple lines in here, all you've been doing is just consolidating between $36 and $28 for over a year. That's it. So this, I wouldn't even worry about this up here. If I would rather you just come over here and just try to swing trade it up and down on top of these moving averages. And that's all this is. It's just trading on top of these moving averages. You have your big days every once in a while. You had a big run here for whatever reason that was, probably earnings. It's just, I just wouldn't do that. I think there's better stocks out there. What else do we have? CCL. This is going to be another 50%er. Let's pull it up. Somebody just asked, how much money do you need to make the bid and ask worth it? All right, here's the deal. This is my opinion. I'm teaching you a skill that you're going to use for the rest of your life. I'm not one of these people that is saying, come and buy all the stocks that I buy, get your oven mitts ready, this thing's going to the moon. I don't tell you what to buy. I teach you how to do this. You'll notice that I'm never going to say, yes, you should buy this, no, you shouldn't buy this. I'm going to say, in my opinion, or what I would do is this. You make your own decision. The point in me saying that is, everything that we do here at Everything Money, we never tell you to buy or sell a stock. That's completely up to you. We're teaching processes, and we want to make people understand what it is to be better investors. So my number, I always say, is 0. I mean, obviously you need money to do something, but I say 0 to go to an extreme. Maybe you have $0 now. Maybe you have $1,000 now. Eventually, you're not going to have $0 or $1,000. You're going to have $50,000, $100,000, $1 million, whatever that is. And at that point, when you do have that money, you're going to have the tools necessary to be successful instead of having $1 million and saying, oh, damn, well, now what do I do? Well, at that point, you're going to know exactly what to do. It's the same thing. You're just learning a process to do it. So that's my spiel. My number is $0, even though it's not actually 0. But for those of you that are able to comprehend extremes, then That was a perfect analogy for you. Okay. Tons of negative pressure here. This is, you guys know this. I've told you many times. I sold 80% of my position on CCL right here because it was hitting that 50% number, and I didn't think it was going to fall apart again. I thought that maybe we were going to start pushing through, going to these highs, but I sold the majority there, and I sold the rest actually right where it is right now, about $22. I made 3 extra cents per share because I think my cost basis was like 22 on the nose, and I think I sold it. I'm sorry, 21.97, and I sold it for like 22, and I just moved on and got out. But the majority of shares I sold around 32, and the reason was extremely simple. Extremely simple. I kept seeing this goes up, comes down, goes up, comes down. It went up this time in the summer of 2021. I said, all right, I'm going to take the majority of my thing, and look, I got lucky there. I got completely lucky there, having the third time that it actually turned out to be the highest that it went. But the only reason, and you would have been very happy selling here, actually even selling here, is just the 50% rule. That's all it is. Same thing with Boeing. Stocks have a very difficult time breaking through 50% areas just because that is so much pressure. And all of these people that lost money on the way down, they just want to get half their money back, 30% of their money back, 70% of their money back, whatever it is. And as soon as it gets halfway up, boom, goes right back down because there's so much profit taking. So right now, what would I do? If it was me, let's see here. If it was me, I'd see if the stochastic can make its way towards 60. If it can't make its way towards 60, I wouldn't be in it. But first, before it makes its way through 60%, you got to see if you can break through this 200-day moving average. If you don't break through the 200, you're in some trouble. So I did the same thing with profit on CCL. Yeah, I mean, I think it made a lot of sense to do it, to take profits on that. And it's no genius. And plus, I got lucky. I got lucky getting out at about $32. So it happens. But there's other times where I'll get out at, say, $32, and then the stock price goes to $50. And it's like, okay, well, that one's unlucky. But if you follow the rules over and over, eventually you're going to come out better in the long run. All right, stock market's open right now. I'll take 2 more stocks, and I got to get out of here. GILD. Gilead. Gilead has been incredibly beaten down. Oof, man, they've been beaten down. So let's see. There's not a lot there. There's some support dating back here to the end of 2020. But listen, if you want to add to a short position, on an engulfing candlestick, go for it. Go for it. It's looking pretty decent. So, all right, HPQ. Did HPQ create their own support line recently? This is going to be the last stock I take. HPQ. Yeah, actually they have kind of. So they have kind of just consolidated in this area. I don't know if it's as much they've created their own support line in here. They've created very nice consolidation on their own after that gap up. And I think it's more of just hovering right around the 50 and 25-day moving average that you have going on. And volume's been very good for the past, actually for pretty much the entire year. Pretty good volume. So if you break below that wick, eventually you're going to go because you're going to fill that gap right there. But be cautious because you got to break through the 100 and 200-day moving average and go from there. So, all right, guys, that is all for today. I will see you back here in 23 and a half hours. Remember, day trading with Paul, Seth, and myself, 10:15 if you're in the Bid and Ask Nation. Link will go out soon. And that's that. Have a wonderful day. See ya.